Well, there's no question that mortgage rates have risen in 2022. We've seen lows as low as 3.25%. We've seen highs as high as 7%. But what does that really mean for your monthly payment? Well, in today's video, we're going to run through a few scenarios with a few different mortgage rates, and we're going to show you exactly how that affects your monthly payment. Hi guys, my name is Mark Melendez. I'm a real estate professional here in Phoenix, Arizona, and I cover some of the most outstanding neighborhoods of the Phoenix area. And if you're thinking about making a move to the Phoenix area, then let's chat. Give me a call, shoot me a text, send me an email, or schedule a Zoom call with me. All of my information is down in the description below. Well, just like I said, we're going to talk about mortgage rates and how they affect your monthly payment. Let's jump right into the topic. Okay guys, so here we are in bankrate.com. So we're going to use their mortgage calculator. So if you hover over this tab that says mortgages, scroll down and click on the one that says calculate your mortgage payment. This is going to bring up their mortgage calculator and it'll populate some fields here for you to apply some numbers. Already pre-filled out, so let's just go to the ones that I've got ready to go. So in this scenario, we're going to be purchasing a home for $425,000. I'm going to show you what it looked like if you bought earlier in the year. So if you bought like at the beginning of the year, you have a 5% down payment on a 30-year loan. Your interest rate was right around 3.75%. And after you add all of these other factors that go into your monthly payment, property taxes, homeowners insurance, PMI, private mortgage insurance, and HOA fees, you're looking at a payment of $2,565 per month. That doesn't look too bad right now when you're looking at what the payments look like. So let's change the interest rate to match what's going on right now, which they're hovering right around just under 7%. So in this scenario, let's shoot for 6.75%. And that's going to change your monthly payment to $3,314. That is about an $800 difference just by the rate going up that much in that short period of time. That's huge for me, and it's probably huge for you and a lot of people out there. So that's why you're seeing a lot more buyers sit on the sidelines and saying, okay, I can't afford it. I want to buy, but I can't afford to buy right now. And that's why you're also seeing more inventory in the marketplace that's sitting longer. Those two have a direct effect with each other. Now let me show you another scenario here, which is almost like a dream scenario. So if you had a larger chunk of money to put down, let's say 20%, you would be, same scenario, $425,000 purchase price, 20% down, that's an $85,000 down payment. So obviously that's a huge chunk of cash. Interest rate right around 6.78. That's kind of like what they're saying is the market rate today. And then when you look at some of these other factors that go into your monthly payment, most notably, if you notice, the PMI is 0, and then let's change our HOA back to about $100. It's kind of like what I'm seeing is about $100 per month. But the big one here is the PMI, private mortgage insurance. When you're putting down a chunk like 20%, in most cases, you will not have to have private mortgage insurance on your loan. And what is private mortgage insurance? So basically, private mortgage insurance is an insurance policy that protects the bank in the event that you default on your loan. So it has no benefit to you whatsoever, but it protects them from you in the event that you default on your loan. Why do you need that? You want to get rid of that as soon as possible because it's absolutely no benefit to you. You can get that down in two ways. You can put 20% down, or once the value of your home exceeds the purchase price or the loan amount, then that gap, if it's 20%, you could refinance and then bring that down. But again, you're not refinancing at today's rate if you have a much lower rate. So here's what we do know. We know that rates are hovering right around 7%, and that's the extent of it. We don't know when they're going to come down. We don't know if they're going to continue to go up. It's just kind of like a wait and see type of thing. Nobody really has a crystal ball. Nobody can predict what's going to happen here. But what we do know is that if you have to purchase right now and you have to get into one of these interest rates that are higher, we know that once they do start coming down, you're going to want to refinance as soon as possible. Now, that's going to be a process that's most likely going to take, 5 to 10 years before you get there. So also keep this in mind. When you refinance your loan, you have to pay for that loan. Just like you have to pay for this initial loan that you're getting, you will have to pay for future loans. So that's another cost that you need to keep in mind and make sure that it actually makes sense to do so. Okay guys, so that's where we're going to end this video. I hope this helps. Go to bankrate.com, go to their mortgage calculator, play around with some numbers and see what makes sense for you. If you have any questions, feel free to reach out. Hey guys, thanks for watching the video. And if you liked the video, make sure to hit that like button for me. Also, don't forget to tap that subscribe button, hit that notification bell as well. That way you can be the first to know about the current market here in Phoenix. Well, just like always, guys, I truly appreciate your time and I hope you all have an amazing day.